The financial impact of the social network X block in Brazil. What does this mean for Elon Musk and his investors? The Brazilian government's decision could lead to a sharp decline in the market value of Elon Musk's social media company, directly affecting its assets. Understand the reason behind the block and the consequences for the company's health. Sao Paulo, September 1st, 2024. In an unexpected move, the Brazilian government announced the blocking of the social network X, formerly known as Twitter, citing concerns over the spread of misinformation and harmful content. This decision had an immediate impact on the company's stock value, affecting not only billionaire Elon Musk, but also his investors worldwide. The social network X, acquired by Elon Musk in 2022 for approximately $44 billion, has faced a series of regulatory and operational challenges since its rebranding. The Brazilian government's decision, one of the platform's largest markets in Latin America, adds more pressure to the already tense financial situation of the company. Stock devaluation. The news of the block in Brazil, one of the world's largest social media markets, was met with apprehension by investors. Shares of Tesla and SpaceX, Musk's other companies, saw a 3% decline at the opening of Nasdaq markets, reflecting investor uncertainty about Musk's ability to manage multiple complex and politically sensitive ventures. The block results in an estimated loss of millions of dollars in advertising revenue for the platform. With approximately 20 million active users in Brazil, the social network X becomes less attractive to advertisers seeking broad and diverse reach. Additionally, the interruption in access could harm user loyalty and reduce engagement, further affecting profitability. Following the announcement of the block, shares of X on Nasdaq experienced an immediate devaluation of about 8%, a loss that could translate into billions of dollars in market value. Wall Street financial analysts have expressed concerns about the long-term impact of this decision, especially if other countries follow Brazil's lead. According to data from Bloomberg, the initial stock devaluation reflects not only the direct loss of advertising revenue from the Brazilian market, but also the growing uncertainty about the platform's viability in international markets where regulations are stricter. Morgan Stanley has already revised its projections for X, reducing the target share price by 15% for the next quarter. Impact on Elon Musk's wealth. Elon Musk, who holds a significant stake in X, saw his net worth drop by billions of dollars in a matter of hours. Musk, who is also the CEO of Tesla and SpaceX, has seen his net worth fluctuate dramatically in recent years due to the volatility of his company's stocks. However, the current situation with X represents a new type of challenge, as it involves not only financial issues but also political and freedom of speech concerns. Industry experts, such as Dan Ives, an analyst at Wedbush Securities, suggest that Musk may need to reconsider his expansion strategies and perhaps seek to quickly resolve the issues with the Brazilian government to prevent a chain reaction in other markets. The future of X. The social network X now faces an uncertain future. Brazil's decision could be a precursor to regulatory challenges in other countries, especially in Europe, where privacy and misinformation laws are strictly enforced. If the company fails to stabilize its user base and ensure advertiser confidence, its position as one of the leading global social media platforms could be seriously compromised. In response to the block, Elon Musk announced plans for an emergency meeting with the company's top executives and investors. Analysts suggest that a diplomatic solution or an adjustment in the platform's content policies may be necessary to restore trust and prevent further stock devaluation. Governance and reputation challenges. For Musk, the block is not just a financial setback, but also a blow to his rebranding and revitalization strategy for the platform. Since taking control of the social network, Musk has tried to implement a series of changes aimed at increasing freedom of expression and reducing content moderation. However, critics argue that this approach has led to a proliferation of harmful content, resulting in inevitable government intervention. The situation in Brazil could serve as a test case for other countries, which might follow suit, leading to potential blocks in key markets such as the European Union and parts of Asia. This puts Musk in a delicate position, where he must balance freedom of expression with social responsibility and regulatory compliance, future prospects, and strategic adjustments. To mitigate the financial impact and prevent a chain reaction of similar blocks, Musk and his team will need to work closely with governments and regulators to ensure that the X platform complies with local norms. This may involve implementing stricter content moderation policies and transparency in its operations. Market analysts suggest that Musk may consider further diversifying revenue streams for the platform, exploring new subscription models or premium services. Another possible response would be to create a more robust and cooperative communication strategy with governments worldwide, showing a commitment to social responsibility and user safety. The Brazilian government's block of X marks a critical point for Elon Musk and his investors. The immediate financial impact highlights the vulnerability of tech companies to government regulation, a factor that could shape the future not only of X, but of the entire tech industry. Musk's reaction and his ability to navigate these turbulent waters will be crucial in determining the platform's destiny and possibly influencing the course of online freedom of expression worldwide.